Good afternoon. Hope everybody's having a great day out there. My name is Jeremiah Conger from Annuity Association, and today we're going to be discussing an annuity review on the Performance Elite fixed indexed annuity from Athene Insurance Company. So I attempted to do this review last week, and I think the review took me about 45 minutes to get through it. And after replaying it, I noticed that my microphone was muted. So I guess I'm going to be reattempting it this time. I have tested my microphone, so we are good to go. I also hope to get this review done a little bit sooner than 45 minutes. We'll dive in right now and get started. So I'm going to share my screen. We'll start with the product brochure. Again, this is the Performance Elite fixed indexed annuity offered by Athene Insurance Company. Before we do that, let me go ahead and read a product disclaimer. I'm going to share my screen here. Hopefully everybody can see this okay. And you can make this a little bit larger by expanding your window. So real quick, this is a review, not a recommendation to buy or sell an annuity. Athene has not endorsed this review in any way, nor do we receive any compensation for this review. This review is meant to give our perspective when breaking down the positives and negatives of this particular annuity. Before purchasing any investment product, please be sure to do your own due diligence and consult a properly licensed professional should you have any specific questions as they relate to your individual circumstances. All names, marks, and materials used for this review are property of their respective owners and not that of AnnuityAssociation.com. While care has been made to ensure this review is complete and accurate, no guarantees are made to the completeness or accuracy. So now that we've got that fun stuff out of the way, let's go ahead and get started with the Performance Elite Fixed Indexed Annuity Independent Review brought to you by Annuity Association. So the first thing we're going to do is dive into the product brochure. So when you're looking at the Athene Performance Elite Fixed Indexed Annuity, please keep in mind the intended purpose behind this specific annuity is a pure, safe growth play, meaning if you're looking for a safe accumulation vehicle, you're not finding it currently in traditional safe money instruments such as your bonds, money markets, bank CDs. The fixed indexed annuities offer a very attractive vehicle in terms of offering a safe growth alternative to what we would traditionally invest in, looking for safety. This product is specifically designed to provide safety of principal with potential upside based on market index performance. Now, your money is not invested completely in the market or at all in the market for that matter, but when you invest or buy a contract for this particular annuity, the insurance company will allow you to participate in a specific market index with no downside risk. So very attractive. Now, for those of you not familiar with Athene, they are a leader in the fixed indexed annuity space. All this company does is annuities. They don't have any other life insurance business. All they do is fixed annuities and fixed indexed annuities. And if I remember correctly, the third quarter results just came back, and Athene was number 2 overall for fixed indexed annuity transactions. They are an A-rated company according to AM Best, S&P, and A- at Fitch. And this company, at the time of this brochure, currently manages $125 billion in assets. They were founded in 2009. And if you follow the insurance industry at all, this company has been making a lot of strides trying to basically buy out their competition. They've been making some really aggressive moves and buying out other organizations. And in my opinion, I think that's a great thing. It's a great thing whenever a company has the means to do something like that. So they're very safe and secure from a financial perspective. Now, in the fixed indexed annuity that we're reviewing today, it's called the Performance Elite. It is a fixed indexed annuity. And when you buy an annuity, regardless of the type, whether it be an income annuity or a growth annuity, the key word that's associated with any annuity is that you're buying a guarantee. In this particular type of an annuity, you're getting a guarantee of principal protection. Every dollar that you invest in this particular product is going to have a guarantee of the principal that there will not be any losses incurred due to market volatility or market risk. So if it was an income annuity, you obviously get guarantees on that income stream that's offered. But in this particular case, with this being a pure accumulation focused product, the guarantee that is provided is on principal protection. It's going to provide upside growth potential based on the specific market index that's associated within the contract. And we're going to dive into those specific index strategies in just a moment. And also in this product, the Performance Elite offers a premium bonus. Now there's 3 different versions of this product, and the differences are just basically the contract term for each one. So they have a 7-year, a 10-year, and a 15-year contract. And same thing with the Performance Elite Plus. There is a plus version. They also have a 7, 10, and 15-year contract. In the 10 and 15-year non-plus versions, they do offer a premium bonus. Now, in this particular case, the premium bonus is very attractive. And 9 times out of 10, when we're reviewing these annuities, we often find that the products offering the premium bonuses or the higher premium bonuses, generally speaking, they're not always offering the highest growth opportunity, because at the end of the day, they're pulling money or moving money from other areas of the contract to be able to provide that bonus. Let's face it, there's no free lunch in this world, and there's only 100 pennies in a dollar. So when somebody's offering a very big bonus, typically they're pulling from the participation rate or the cap rates that are offered on the growth side. They may be reducing those to then be able to provide a bonus. Now, what's different about the Performance Elite that we found is that the premium bonuses that are offered, not only are they very attractive and competitive in this space, but the participation rates for the growth potential of the contract is very, very aggressive and attractive. And we don't see that they have pulled or reduced the participation rates to offer this bonus. So when you're getting this bonus, you're also getting very attractive participation rates, which is not always the case with other competitors in the market. We'll dive into the specifics of the premium bonuses. They do differ by state, and they do differ by the contract tenure or term that you sign up for. Again, protection's guaranteed here. There's no downside risk from the market. And as with any annuity, most annuities, tax deferral is an added perk, where your money grows tax deferred, and at the end, when you take a distribution, then obviously taxes would be due on those dollars. You do have the option to convert the accumulation value at the end of the surrender period or end of the contract period and convert it to income, but very rarely do we find that people are typically do that. Most oftentimes, you're going to be better if you're looking for an income stream or a lifetime income stream. At the end of this surrender period, you're most likely going to be better off revisiting the annuity marketplace and seeing if there's an immediate income annuity or a deferred income annuity that would offer a higher distribution rate. There is a death benefit offered in the contract that equals the accumulation value plus any interest. And that is a very nice perk to have inside this contract, because it does avoid probate in the event of a death. Your beneficiaries would have access to the funds with no probate process required. So again, it's about protecting and growing your retirement nest egg. The purpose of this fixed indexed annuity is a pure accumulation focused strategy. And there's a variety of different interest crediting strategies that we're going to be diving into momentarily. And we'll dive into the bonus as well. So again, there's 3 versions, 7, 10, and 15 years. On the 10 and 15 non-plus versions, they do offer the premium bonus. Also included in all 50 states except for California and Massachusetts, the confinement waiver of withdrawal charges and terminal illness waiver of withdrawal charges is included in all 3 versions. What that basically means, it's an added peace of mind that in the event you have a confinement need for long-term care or assisted living, or a terminal illness that occurs within the surrender period or within the contract period, that you would have access 100% to all of your money with no incurred surrender penalties or charges. So very, very nice peace of mind there. In fixed indexed annuities, and these particular ones especially, they do include free withdrawals starting after year on the 10 and 15 after years 2. And on the Elite 7, the 7-year period, they do offer 10% free withdrawal starting after year 1. On the 10 and 15 contract term, it's 5% per year starting years 2 and beyond. On the 7, it's 10% per year with no penalty starting after the first year. All 3 versions of this product do allow the required minimum distributions to start after year 1. Now, getting into the Performance Elite Plus version, again, 7, 10, and 15-year periods, they do charge a rider charge for these plus versions. It's 95 basis points or 95 percentage points of 1%. And the premium bonus is going to now be included on the Elite 7 Plus. So on the regular Elite 7, there is no bonus. If you get the Plus version, they do offer a bonus. We'll get into the specificities of that bonus amount shortly. But on the 10 and 15 Plus versions, there is no regular bonus, but they have what's called an enhanced bonus. And what that is they're basically adding above and beyond the original bonus that was offered in the non-Plus versions. All 3 versions come with the same confinement waiver and terminal illness waivers, and the free withdrawals for RMDs are also included. And in addition to the Plus version, on all 3 versions, you're going to have what's called enhanced free withdrawals. So starting year 1, you can access up to 10% of your accumulation and any interest with no penalties incurred. In addition to that, the nice perk about the Plus version, and this is really where I think this product was designed, is when it comes to looking at liquidity, the insurance companies understand that their target demographic, which is retirees and pre-retirees, they know that liquidity is an important part of the overall retirement plan. And by buying this Plus version, you're going to have access up to 20% of the principal plus any interest per year, free withdrawal with no penalty, as long as the year prior there was no withdrawals taken. So for example, after year 1, if you don't take any withdrawals from your principal plus interest, the next year you'd be eligible to take 20% of the principal plus interest with no penalties incurred. In addition, another peace of mind was added in the Plus version, which is called return of premium. So after the 4th contract year in any 3 versions of this product in the Plus version, if for any reason you have a need to make a change and you decide, hey, these products aren't right for me, I need to pull my money out, I just want to get my money back and go a different direction, after the 4th contract year, you can elect for return of premium, which is very, very nice. Okay. So now we're going to dive into the specific annuity index strategies that are found in the Performance Elite. And we'll also be diving into the bonuses. So the rest of this brochure just goes over the actual terms and conditions of what we just discussed. So I'm not going to spend a lot of time there. But I will go ahead and pull up my software now, where we'll look at the bonuses first, and then we'll get into the actual specific index strategies. So starting with the Elite 15, we're going to be reviewing the Florida version of this product. Majority of them are different by state, because each individual state governs their insurance business. So there are slightly different terms and conditions found sometimes state to state. So we are going to be looking at the Florida version, but if you would like to request the version for your particular state, just go to annuityassociation.com. Right there on the main screen, request your free report, and we'll send that out to you. So on the Athene Performance Elite 15, there is a 9% premium bonus that's currently offered. And on the 15 Plus, there is currently a 15% premium bonus. So what does that mean? Out of every $100,000 that you invest in this product, On the Elite 15, you'd get $9,000 credited as a bonus that's fully vested after the 15 years of surrender period. On the Elite Plus 15, every $100,000 you put in that one, you'd be getting a $15,000 bonus on your money. So very, very competitive and aggressive bonus offers here in this particular product. On the Elite 7 Plus, currently a 6% premium bonus that's offered. On the non-plus version of the Elite 7, there is no bonus, so keep that in mind. On the Elite 10, ages 65 through 78, the 3% bonus is offered, and then if you're 64 or younger, there's a 4% bonus. And then on the 10 plus, there's a 9% bonus if you're 65 or older, and if you're under 64 years of age, a 10% bonus on the Elite 10 plus. So very, very competitive there. Now we're going to dive into the actual index crediting strategies here. We're going to look at the Elite 10, which is typically a 10-year period is usually about average in the fixed indexed annuity marketplace in terms of the surrender period. So we'll go ahead and look at that one. And we'll run the illustration looking at a male that is 64 years of age and in the state of Florida. We're going to look at a $100,000 premium. And the first thing that we're going to do is look at the specific strategies from the index perspective to see what is going to offer us the highest growth opportunity, because at the end of the day, that's what we're doing this for. That's why we're buying this particular annuity, is we want to go ahead and invest and grow our money safely with no market risk. And we want to find and identify the highest index crediting strategy that will be offered in this contract. So what we do here at Annuity Association is we take a look at all of the various indexes and the associated rates that are included in the contract for those index strategies. And we analyze them to determine which one is going to give us the highest growth potential. And that also includes possibly looking at multiple index strategies that are offered in the annuity and allocating a mix of funds to each individual one to see, well, if I put 50% in this index and 50% in the other, will that give me a higher opportunity for growth? And we take a look at all of those things from a holistic lens to determine which one's going to give us the best opportunity. Now, this is a backwards looking performance. So when we're looking at these numbers, we're looking at the most recent 10-year performance. As you guys are well aware, the markets have performed very, very strongly the last 10 years. And what's nice about that is that not only are we looking at the last 10 years, but if you look at these two colored numbers, the green and the red, the green is going to indicate the highest 10-year period over the last 30 years, and the red is going to indicate the lowest 10-year performance over the last 30 years. So this bold number, 11.25, every time I click on it, it moves forward. The 11.25%, that's the average annual credited interest over the last 10 years if you were 100% allocated to the BNP Paribas Multi-Asset Index 2-year point-to-point with the participation rate. Now, this particular product offered by Athene is one that offers what's called an enhanced participation rider. Now, what that means is for a fee of 1.75%, Athene will allow the investor the ability to have a higher participation rate on these associated indexes that are offered, with the idea behind it is that you get more growth potential. Now, not everybody is wanting to pay a fee. We have determined that if you do look at the fee, it does have a higher growth opportunity when back testing it to see how it's performed over the last 10 and 15-year periods. So we do feel that the fee is worth considering, but if you're an investor that, just, hey, I don't want any fees, I don't want to complicate anything, I just want to keep it simple, they do have non-feed participation rates and crediting methods found in the same product. But today, just for this review purpose, we're going to be looking at the index strategies with the enhanced participation riders and that fee of 1.75%. So you've got a lot of numbers on the screen. All you're looking at here is the different index strategies that are offered. We've got the 2-year point-to-point from the BNP Paribas Multi-Asset Index. We have the NASDAQ FC Index. And then we have a blend of those two different indexes and figuring out what allocation, how much we put in one versus the other. And then it's back testing the performance based on those figures. Now, the number one performing strategy found in the Performance Elite at this time of review is the 2-year BNP Paribas multi-asset with the participation rate. If you were 100% allocated to that index, our back testing performance shows that it will give you the highest growth opportunity, all based on the markets performing similar to how they've performed the last 10 years. Obviously, prior performance is not an indicator of future performance, but we really want to take a look at what these could have done if we had them 10 years ago or if we were invested in them over the last 10 years. And then again, going back to this red and green number, this is very important because when we look at this, and I'll dive into it just momentarily, but when we look at this, this is showing us, let me see if I've got it here. Let me pull it up here. When we look at the performance over this period of time, we can look at the worst performance, the lowest 10-year performance of the last, 20 years or so. And what I always advise clients and prospective clients is look at the worst case scenario and what's back tested at the lowest point to kind of give you kind of a real life perspective on what you could potentially have worst case. Now, let's go to the Elite 10. Bear with me, guys. Thanks for your patience here. Let me go to Florida. So we're looking at apples to apples. Okay. So here's that 8.84% red number here to the right. What this is showing us is that the worst 10-year period over the last 20 years was January 8th of 2006 to January 8th of 2016. And it was 8.84%. And that's factoring in that 1.75% enhanced participation rider to give us the higher participation rates to get this growth potential. So the key indicator here is that that was during the global financial crisis that occurred back in 2007, 2008, and then it came back, started to rebound 2009. So it's taking us through a pretty historic low period in our economy, and to give you an idea of what this still could have done during some of the worst financial turnouts that we've had in a long time. So the reason for that is because of it being a fixed indexed annuity, when the rest of the market is down, your principal plus any interest that you've accrued at that time and locked in, your principal's protected. So on a down year, your principal and interest is staying level. It would be credited as zero. So your growth is flat on a chart. On good years that the performance is well and you participate in it, it goes up. And then if it's a down year the next year, it goes flat again. So it looks like a staircase when you look at the growth pattern on a chart. So let's go ahead and pull back up the illustration. So let me go ahead and move forward here. So we're going to select the highest growth opportunity and we're going to generate the report. Bear with me. Okay, so in this given index strategy and crediting method that we're currently allocated to on this illustration, we're in the BNP Paribas Multi-Asset Index, which is a risk-controlled index. If you haven't learned about those yet, start to do some research. They're very, very impactful to the overall performance of your annuity because these new multi-asset risk-controlled indexes can rebalance on a day-to-day basis, and some even do it by the hour. So when it comes down to hedging volatility and still being able to make money during very volatile markets, that's what they're designed for. In this particular index strategy with the enhanced rate fee of 1.75%, we're getting a 185% participation rate of the index performance. So in a given 2-year period, if the index went up 10% during your 2-year period, your contract would be credited 18.5% interest. Now you're probably wondering, how in the world does an insurance company offer a participation rate above and beyond 100%? And when I first got into this industry, that was my number one question, is how do these companies do that? I mean, how do they make any money, right? Everybody is probably wondering that. Well, if you understand the insurance industry, the way that they work, first and foremost in the fixed indexed annuity, is they're to offer principal protection. They're taking their dollars and matching your investment. So it's dollar for dollar. They'll take $100,000 in this case, if it's a $100,000 investment, and they'll go buy some long-term bonds, typically around the same tenure as the surrender period. So in this case, it's a 10-year period. They'll buy some bonds to guarantee that floor of your investment, earning a little bit of interest. Now, these are billion-dollar, tens of billions of dollar insurance organizations that have access to institutional pricing that, me and you have no access to. They also have world-class money managers on their team that they can go to hedge volatility and buy options and things to grow their money. And the reason why these multi-asset risk-controlled indexes are so attractive, both from a consumer perspective as well as the insurance company perspective, is for one reason. These actively traded, algorithm-based index strategies help the insurance company make money because they're very predictable from a volatility triggered perspective. They have certain rules and parameters and triggers built into the index algorithm that helps the insurance company hedge and buy options based on volatility. They can make money every day practically because they know when that volatility is going to spike, and when it does, they're buying options on those movements. And so if you compare it to a traditional index like the S&P 500 or the NASDAQ or whatever, those indexes are not algorithmic based. So the ability to hedge volatility and buy options to make money on volatility is not as predictable. So these insurance companies want people to invest their dollars with them, and they offer these annuities with these proprietary index strategies because the insurance company is able to take their own money dollar for dollar. They match your investment, and they'll go and they'll buy options on these asset controlled index strategies, or indexes rather, and they're able to make money very quickly. When you add in that 2-year anniversary period for the index strategy, so this particular case, it's 2 years, that gives the insurance company 2 years of time every day for 2 years to be able to buy options on these volatile periods of time, make money. They're buying the options for, a lesser dollar amount, and if it triggers, they've hedged, they've made their money. And when they do that, they're able to make money over a 2-year period of time. So that's how they can offer these high participation rates, because they're very predictable from a risk perspective and a volatility perspective. When you know the index and the way that it works and the way the algorithms work, and you have world-class money managers that can go in and basically push a button and say, all right, when it hits this number, buy. When it hits this number, sell. When it hits this number, buy. When it hits this number, sell. It allows them to basically predict income, predict profits for the insurance company. So hope I didn't get too far into the weeds there. Hope that makes sense to you. Now, on the guarantee, again, you're getting principal protection in the guarantee of the contract in a fixed indexed annuity. And then what this is doing is taking a look at the most recent 10-year period. The green column is your accumulation value, and then it's assuming the last 10-year performance has repeated itself. And so it's given you a credit every 2 years of what this index strategy did over the last 10 years, factored in with the 185% participation rate. And so after 10 years, if you invested $100,000 plus the bonus that's included in the 10-year version of this product, the money would have grown to $253,000 and change. Very cool. What's also nice about this illustration, it's going to show us again the most recent 10-year period, the highest 10-year period, and the lowest 10-year period of the last 20 years. So you'll see the most recent period here. The highest 10-year period was April of 06 to April of 2015. It was a 12.24 average annual credited interest rate. And then on the low period from January 9th, of 07 to January 9th of 2016, 8.84%. The surrender period is something we'll cover real briefly. So each fixed indexed annuity has what's called a surrender charge schedule. It's the contract term essentially. And the reason why those are in place is for one reason. In order for the insurance company to make things work logistically on their end to provide you as a consumer the principal protection guarantee, they have to ensure that you're going to keep the money in there for an associated amount of time. And in this case, it's a 10-year period. And if you exit early because of the insurance company buying holdings that are longer term investments, they have to cover their behind in the event you exit early, because they'll be forced to then sell those holdings that are long-term. And if they're down at that present time, they're going to need to cover those losses. So the surrender period in this case is 10 years, starts at 12% the first 3 years, and then it goes down over the next 6 years, ending at 4% year 10. The 7-year elite will be very similar, and then the 15-year elite very similar there too. Keep in mind, when you're buying a fixed indexed annuity, the key here is to make sure that your overall estate and your overall retirement plan has enough liquidity for contingent events or catastrophic events that are unforeseen. And we want to make sure that you're keeping enough money outside of the annuity for those types of events so that you never have to go in and pull out all of your money of the fixed indexed annuity. Keep in mind, you will have access up to 10% per year in the 10 and 15-year versions. And on the Elite 7, actually, I think it's Elite 7, you have 10%, but on the Elite 10 and 15, it's 5%. Free withdrawal with no penalty. These are also able to be set up as systematic withdrawals. So if you're trying to set up a withdrawal plan just to supplement your income, you can set it up systematically where it comes every month or every quarter or every year. And you can also elect to take interest only during the years that you have growth. So very cool there. So we've covered the benefits and features. We've covered the guarantee of principal protection. We have covered the bonuses. We've covered the index strategies. One last thing is, if you're interested in learning what the index strategies are without the bonus, let me go ahead and dive into that real briefly, and we'll take a look. So again, I'm going to pull up the Elite 10 version, which is the more common version. 10 years is usually the sweet spot here in the fixed indexed annuity space. So if you're looking at the non-feed or non-enhanced rider index strategies, they have both a 1-year point-to-point on the same BNP Paribas asset risk controlled. It's a 65% participation rate. They do offer the standard S&P 500, 3.5% cap. If you're not familiar with the word cap, basically they would cap your growth opportunity at that 3.5%. We do not look at annuities and index strategies that have a cap. We don't look at caps and we don't look at spreads. If you're looking for the best opportunity for growth, you want to look at participation rate only with no cap and no spread. No cap and no spread. In addition, they have the same 2-year point-to-point on the Paribas multi-asset risk controlled index. 90% participation rate in the non-feed version. So you got 90% versus the 185%. Big difference there. For that 1.75% fee, you're getting double the amount of participation rate. The last thing we'll wrap up with, if you're wondering, well, how's this index performed thus far, year to date? We can show you. That's what we do here at Annuity Association, is not only look at the specific offerings in the annuity world, but we look at the crediting methods and the indexes themselves to see how they're doing. So we're going to look at BMP, and that one is the multi-asset diversified 5. So year to date, it's at 2.68%. Last year, it was at 13%. 2018 down 4.35. The last 1 year, 2.88. Last 5 years, 4.67. The last 10 years, 5.81. And since inception, 4.83. So what's really cool is even at 2.68%, because if you elected for that 185% rider chart, you'd be just about at 5% growth based on the participation rate if your 2-year contract was coming up and your anniversary was approaching the end of this year. So I hope that all makes sense to you. I hope that you've gotten some value out of this product review by Performance Elite from Athene. We are here at Annuity Association to serve you, and if you have any questions, you'd like a personal report, or maybe you have a product that you're comparing or wanting to compare to the Performance Elite, you can go to annuityassociation.com. Right there on the main page, there should be a button that you'll find that says request my free report. Put your email address in, answer some of the quick questions, and we'll get you a comparison report out to show you the highest growth opportunity annuities on the market, or maybe you're wanting to compare income annuities. If you're wanting to compare annuities, you've come to the right place. annuityassociation.com. Request your free report there. Thanks so much for tuning in, and we look forward to serving your annuity questions and needs here in the near future. Thanks so much. You have a great day.